Good morning. This is Andrew from Trend Follow Mentor. First of all, it's Sunday, the 13th of December. I like working on Sundays because this way the market's not open. There's nothing to think about, and you work at your leisure. And in this update, we're going to talk about the stock market. First of all, I want to say I apologize. My website is down. It's been hacked. Working to get it back up. That's one. Second thing is I'm a non-professional, whatever you want to call it, for the stock market. I am a commodity trading advisor, but I don't have any designations with the stock market. I focus on the stock market and on high growth stocks. A lot of the idea of Can Slim and Investors Business Daily. And primarily what we always do is we look at the stock market first. And for those of you that are invested, it's pretty obvious that actually Friday was a very, very ugly day, to kind of say the least. The averages basically gapped down on the open and stayed down. There was about a loss of about 2% plus on the S&Ps and almost a little under 2% on the NASDAQ. You can see it here. Our model still has us in. Our model is based on various moving averages. Very simple ideas will keep me on the right side of the market, but you can see how this bar turned red. So we're still in the NASDAQ again, but barely. Anything can happen. Wednesday will be a very interesting day because of the interest rate announcement. But you can see our model on the S&Ps actually went negative and we went to cash. And what's also very interesting is it was done on high volume. Again, the stock market is very difficult to invest in and trade. It's not just buy and hold and forget. I mean, too many people have forgotten the pain, the 50% drawdowns of 2003 and 2008. So that's why I teach trend following. The other thing I just started to elaborate on is the volume was very high here. Not as high as here, as we saw in August, but the volume was high. And what's also very negative for the market is there is an extreme number of distribution days where the market goes down on high volume. I believe we have 9 on the NASDAQ and 8 on the S&P, which anything over 6 is an extreme red flag. We have those. We have moving average crossovers. We're having downturns on high volume. But again, anything can happen. That's why we really have to trade with, plans. Let's just jump back to the NASDAQ 1 second. Because we also had the big up days. We had the down day, the up day, and all of this is really tough to be an investor. But that's why you have rules. And that's why, we look to stay out of big trouble. And right now, big trouble seems to be coming. But again, and Investor Business Daily went to a correction mode. But again, Wednesday will be a very interesting day to see if what's going to happen with interest rates. So in my interpretation, again, this is my personal, and it's up to you to make your own decisions, is now's the time to protect capital. I mean, for those of you that have been following the news that high yields, that they're gating, that even if you bought into a high yield fund, you might not be able to get out of it. It's closed. So this is what the risks are. It's never easy. It's never, just make all this money. There's always risks. And what's also, let's say, very disturbing, the leading stocks that have been leading this up run, and actually there's only been a handful that have really taken off and worked, like UVE, which I'll show you. It's actually cratered. And let's do UVE. Let's do it real quick. Hang on. 1 second. And here it goes. This was a leader. And as you can see, many different ways to have taken, to get involved. An early entry would have been here. The typical cup and handle would have been here. Had a nice run. Implosion. This one day on big volume down, and then we broke the 50-day exponential moving average, and it was all over. That's not what you want to see with leaders. You want to see trends just keep on going. This was just one example. Another example is Fleetmatics. Let's do that one. This one also gave back a lot. You can see it here. Breaking the 50. That would have been your exit sign, and also it was on high volume. This is not what you want to see. You have your breakout here. You had your 20% return and then an implosion. Not good. Let's look at the current leaders. And then also I will tell you that some of these stocks I'm in myself, I'm in Facebook. It's not doing it. And you can see we're knocking at the door in the 50-day period exponential moving average. Hopefully it can hold it. I have my rules. I got in about here, so it's almost a scratch trade. But the thing is, I follow exact rules that once it's up more than 11%, then I'll start going to break even. It didn't get there yet. It's not doing it. Lithia, not doing it. Here's another 50-period exponential moving average. And you can see how it turned around here, but it gapped down. And this one was a little bit favorable. It wasn't on the greatest volume, but still not looking good. Southwest Airlines, I was in this, got taken out, exited. Thank you. This is what you have to do. You have to honor your stops. I put in a 7% stop for my entry, and you could just see where it's very simple to see where you get in. Take out these highs. You had a consolidation. It breaks out and then fails. Not what you want to see. Not showing strength. Palo Alto, same thing. And this was really a strong stock, but it's not doing it. I bought it here. You can see the breakout here a little early. Not making any money. This week I lost money. This is what trading is. This is another stock I'm in. Not doing it. There is very few leaders that are doing it. Dicom. Well, let's look at these here. Constellation. Not doing it. Even with all their big profits and everything else, just not doing it. Because what we do is we combine a combination of fundamental and technical. We look for breakouts, like trend following, idea breakouts, but we look for companies that are making money quarterly, annually, something that's unique about them. I mean, with Facebook, there's no other Facebook. There is no competitor. Constellation Brands, it was pretty much, they're it for the largest wine and beer company in the world. And they're doing expansions. Another one, Dicom, not doing it. You can see it took out the 50-period exponential moving average. Had a nice little breakout here. You always want to look on the weekly. So really what's happening is the stock market is not doing it. There is risk. There is terrible news all over the place. Does this mean you should exit your positions? You're the only one that should tell you yourself or your financial advisor, not me. I'm not giving you advice. I'm just telling you how I see the market. I see a lot of risk. I'm monitoring my stops. I'm not panicking because this market can turn around and has turned around many times, but we're late stage bear market potentially. We're going on almost 7 years of a bull market. But again, anything can happen. Hopefully next week my website will be back up. And if there's anything I can help you with, you can just let me know. It's Andrew at trendfollowingmentor.com. Thank you.